Bring that ass back like a boom, 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 boom.
Hey guys, what's up? This is Supernova. You're with Boom Traders Weekly Overview for October the 2nd, week 39 of 2022, and let's get it going. Now, this week we have a little bit longer session. I would say we have models, we have market price action, internals, notes, sentiment, and seasonality summary at the end. I'll try to keep it as short as possible. There's not that much to talk about, so first things first, the risk models, sell signal, general market, up, down, volume, new highs, new lows, stock participation, pretty much everything is negative. Trading environment's hard painting, meaning that if you're trading breakouts, you better stop right here, take it to cash, and wait for some market improvement. And as far as separation of long, mid, and short term, long term definitely negative. You can see, and I put here in the brackets think months, think weeks. For the midterm is still negative. Short term, if you're looking at the daily charts, we are neutral, and the only reason why we have it on neutral is because we want to see Monday's action, whether we continue undercutting the lows of this recent consolidation, or we get back into this little channel, and I'll show you when we get to the chart in just a minute. What we mean, it looks like we might be breaking to the downside, so this could very well turn to negative on Monday, but also we are very oversold, and pretty much all momentum indicators are pointing for a very oversold environment, so we can get a bounce basically pretty much any minute right now, and that will turn the short term to positive. However, again, since the long and the midterm are negative, you can treat those bounces as just short rallies, bear rallies that are pretty much, you can use them to offload any longs that you have or initiate new short positions at the resistance zones above. So now let's take a look at the charts. So for charts, first starting with the S&P 500, and you can see recent chart. Now I slapped here stochastics. This is just the regular stochastics slow indicator. And what I wanted to show you is we are getting to a point where we are consistently oversold, as you can see right here. We're just staying oversold. We're not able to bounce. Like for example, if you take the previous one right here in June, we went oversold, went oversold, and then we immediately bounced off this level. And then if you notice how stochastics is reacting, it went overbought right here, but it remained overbought for quite some time. And during this period of stochastics remaining overbought, we were just moving sideways to upwards. Not a very explosive way, but this slow grinding up way. So stochastics being down same way right here and continuing to go lower despite the fact that we are very oversold gives us a hint of the weakness of the market. Now you will see later when I talk about the market internals that the VIX is not moving higher, which is sort of a divergence, so this might be a little bit of a positive sign. But nevertheless, stochastics telling us, and pretty much every momentum indicator that you can put on is telling us that the market is really weak. Also, take a look right here. Stochastics again became oversold. That is 18th of April. Sorry. So stochastics became oversold right here, April, and then it continued to be oversold with the fast line just pinching back and forth with the average, and price just went down in a very controlled but extreme way, because you can see right here we went from 433 to right there 385 with stochastics still being oversold. So this is giving us a hint of the weakness of the market. So this is the S&P 500. We're going to take a look at the put call ratio later when we look at everything, all the market internals. But you can see like put call ratios for all the markets, they are pretty high, above 1. We finished Friday with net highs, net lows at minus 484 for the S&P 500. Volume was higher. You can see right here, volume was higher, so there was increased selling right here. Advancing to declining issues was not too bad, minus 137 to 1, so not too bad. But when I mentioned that the short term is on neutral, I meant this channel right here, and I'm just going to lose a trend line right here. So I meant this channel right here. So you have, we definitely broke it on Friday, but and let me just, oh, sorry, let me just zoom, come on, zoom in a little bit. So we broke it on Friday, and I was expecting to see whether Monday's reaction will be a sharp snapback back into the channel and maybe going to test these or continue lower. Now, if we open lower than this and basically fill the gap and move lower again, that'll definitely be a short signal. So we are going to move the short term on negative again. But for the past 5 days, we had it on neutral just because of this consolidation right here. And remember, when we're talking about short term, that will catch the market bounces in the bear market, but it's definitely something to look for to cut your exposure into long positions, maybe initiate short positions right around these resistance zones. Now let's take a look at Nasdaq, but it's pretty much the same thing. I mean, it's looking very ugly at the moment, and here it is again, the channel. If you can, okay, let me just draw it like this. If you're looking at this, so we have this little channel right here, 5 days. You can also call it a bear flag if you want. It's not a perfect one, but nevertheless, it fits the criteria. And we broke the lows right here on Friday. Again, we actually had a good day for the first couple of hours. We're moving higher, and then just, all hell broke loose. Volume again elevated. You can see some of the statistics: net highs, net lows, minus 513. And at this point, I'm not even going to make any projection where this could potentially stop. Now, I have drawn some lines right here, and an obvious place where you can search for some support is right here. This double bottoms. We are right now. Come on, stick, and then we have one higher double bottom right here. We are actually right there. So I wouldn't really try to guess where we could stop. I mean, we can draw some resistance lines and stuff like this, but maybe we can also draw some Fibonacci extensions, A, B, C, D waves if you are into that thing. But like you can see right here, we come to about, what is that? You can't see it right here, but it's 231.87, which coincides pretty much with this high right here. So could be some area of more than one zone converging right into here. So but it's looking dull. Then nevertheless, it's looking dull. So I just want to show you that, and this is the reason why we had it on neutral the market. But if it's continuing downside on Monday, definitely we'll put the short term in negative as well. IWM is one that is still holding the lows right here. We still haven't undercut the lows, and if you draw a line, you will see that we still haven't cut the lows, and we can say that we're moving in this channel right now. So you see this channel is pretty well respected. We hit the upper band from this high. Actually drew it from the open. Never mind, we hit the high, we got rejected, we moved lower, but we're still not breaking the lows of June. So IWM is definitely higher relative strength than the other ones, but the stochastic still remaining this oversold condition for quite some time, and is unable to bounce. So not looking good. As far as my oscillators are looking, before we take a look at the market internals, again, Nasdaq, this purple line, I'm sorry, the white line, Nasdaq is acting weaker than S&P. And if you look at my oscillators, they actually recorded lower lows right here in the previous move down. Now this one, there's a divergence for the indicators. Even Side breadth thrust and McClellan oscillators, they are showing some divergence right here. So we're making a lower low in the markets, but these are making higher lows. So again, alongside with VIX, as you're going to see right in a minute, this might prove to be sort of a divergence right here. So be careful. It's a very precarious position that we are in the market. So this is what I have for price action. Let's take it back to market internals, and we'll see what the market health is. Now let's talk about market internals for a brief moment, and we're going to take a look at TradeStation for that. You can see the S&P 500 right here. This is price undercut June lows, advanced decline line. The blue line is also making new lows, so everything is intact right here. Of course, it's looking dull. One thing I want to point out here is the stocks making net new lows compared to the stocks making net new highs. And you can see right here on Friday we had 90 to 1. And there's a proliferation of red, so it's looking pretty painful right now. Same thing with the Nasdaq, advanced decline line making new lows. I'm sorry, I wish it was making new highs, but advanced decline line making new lows. Price as well undercutting the June lows. Proliferation of net new lows. IWM, same thing. However, you can see right here, price has not still undercut the June lows, whereas the advanced decline line is at an all-time low, and of course net new lows in the stocks, part of the Russell 2000 ETF. Dow Jones Industrial, same thing, although mid-March we made a low in the advanced decline line and price was considerably higher, so that would generally suggest that stocks are stronger than price action in Dow Jones. So I think that the market is waiting on the Dow Jones right now. Now looking at VIX, there's some divergence that can be seen right here, and VIX is not making new highs, whereas price on the S&P 500 is making new lows. So that can be several yet important notification right here. In order for market to really drop to puke, we need VIX higher than that, and right now we have it around 31. We need considerably higher for the market to really exhaust itself. So I think that this is one subtle divergence that we can monitor to see how is VIX reacting to this price action and whether this is actually an exhaustive move to the downside from the market. As far as stocks about their 20-day moving averages, you can see right now we have 14.22% of stocks above their 20-day moving average. So it's pretty bad, and the stochastics on this indicator, which is what my oversold indicator, is deeply oversold. However, there's also a divergence right here, and you can see the previous time we were hitting the 15% mark, stochastic was lower, so there's like a positive divergence here, so we might be actually exhausting ourselves to the downside. As far as put call ratio is concerned, we are making a high here, but still not higher than the June lows, so there's still some time to go, and put call started dropping later last week. You can see, even if you look at the put call itself, not a moving average of it, you can see that these levels are significantly lower than right here. And I think this is important to talk about the stocks making 52-week highs against the stocks making 52-week lows. You can definitely see the red line starting somewhere in late 2021, October, November. We had the last spike of stocks making 52-week highs, and then it's been all lows. So you can see the green line is pretty much dead right now. It's a straight line. So that's what I have for you in market internals. They're not showing a lot of signals. Pretty much everything is pointing to the downside, with the exception of VIX divergence and some divergence on the stochastics for the stocks that are trading above their 20-day moving average. Now we're also going to look at some data talking about cyclework and seasonality, which will also show you that we might be at a pivotal point right here. But again, we need to take all this information with a grain of salt and look at the stocks as the ultimate judgment of whether the market is going higher or lower. Notes are concerned, I have a couple of things I wanted to discuss here, and as I mentioned in the market price action, we're deeply oversold and we cannot bounce. So this is definitely an indication of market weakness. We undercut June lows on S&P 500 and Nasdaq. There was no attempt to bounce, and pretty much everything positive was quickly met with selling, and we got down to negative territory again. So this is just another proof that there is lack of buying in the markets right now, and I don't see a reason why somebody would change their stance on the market for now. Now, of course, this could change rapidly with some macro news or some Fed actions, but for now, I don't just see the reason why that would happen. On the global rate hike, world economics and recession, we have this chart from Ned Davies Research, and you can clearly see here at the bottom, this is the S&P 500. But here at the bottom, we have the percent of central banks whose last rate change was a decrease. Basically, a percentage of banks that are decreasing the rates instead of increasing, as we see. And when we're getting to 10 level, which happened prior to that in 2006, end of 2006, beginning of 2007. But you can see 11.76% of banks are actually decreasing rates. So that leaves us with almost 88 and something percent banks that are either neutral or raising rates, and that puts a lot of pressure on the world economy. So you definitely have to be aware of that situation as well for macroeconomics. A question is how much is already discounted, because the market is a discounting mechanism, and you could argue that the market has dropped quite a lot before officially declaring the market into a recession. But also keep in mind that I'm not sure, but I think this is the first time that we are redefining how we actually define recession. So I think that we are in a full-blown recession, and just the fact that we are trying to get away from it by just wording it differently, it's first of all hilarious, but second of all is giving us a clue of how much the Fed don't want to get into the recession game, and how careful they are about the state of the market. Now more than ever, they are Fed members and politicians that are involved in this trading. So I think that they'll try to do their best, even by wording it differently, to save the markets from a crash. And also, there's been a lot of criticism going around with the Fed high pace of rate hikes. Some, prominent venture capitalists and CEOs of really big companies are already called this a mistake. Already called for the Fed to, turn around and stop, because they're going to kill pretty much everything. So this definitely weighs in some pressure on them, and I don't think that they will, how to put it, I don't think that they'll reverse course right away, but I think that that's definitely something to consider, in the fact that we might be nearing the end. However, if you look at the market drops in recession, which is my last point of notes, the market drops in recession on average 43.4%. Right now we are about 25%, and the lowest that has happened right here in 82, 83, we had minus 27%. So we are still far from the average. This, of course, right here you see 2008. We're still far from the average, so there's still some way to go, but we are not in a recession, right? So one more thing that I want to mention right here is another pressure is coming from Russia and Ukraine. I don't have it in my notes, but I was just thinking about that before starting recording. With the annexation of the 4 territories by Russia, and basically declaring them Russian territory, now they have in their, of course, eyes, the right to defend those territories as if it was Russia, and the threat of using nukes by Putin becomes ever more real. So that's just another thing to put pressure on the markets. Now, as far as sentiment goes, I don't think you're surprised. You know that this goes 1 week back. This is the American Association of Individual Investors. It goes 1 week back. And I don't think that you will be surprised to see that we basically last week, not this week, but last week, we hit the low of the year, or bearish high, so to speak, 60.9%. You can see right here, that's the previous week. Historical averages are far higher than that. You can see 38 on the bullish, 30.5 on the bearish, but now we're in clear bearish territory, and bearishness is not going away. You can see they're just a little bit more bulls, the neutrals, this week or previous week, so to speak. But I'm thinking that if market continues to plunge as it suggested on Friday, I'm thinking that you will see a new 1 year bearish high for next week. Now, as far as Fear and Greed Index is concerned, we moved to extreme fear. Last week we closed it. Well, that's on Friday. I'm sorry, they just updated pretty much every day. So that was on Thursday, and now the reading is for Friday. So 1 week ago we were at 24. This week we closed at 15. Thursday was 14, and you can see 1 year ago at this time we were in extreme fear as well. So just discuss this here. As we mentioned before September began, September is by far the worst month of the year for stocks. So you can see previous year we were at the end of September we ended at extreme fear 9. Now we are ending September at extreme fear 15. So there is something going on with September, right? As far as Bitcoin Fear and Greed Index is concerned, again, extreme fear moved to 24. It was doing a bit better for the better part of September, but now it moved to extreme fear as well. Although I must admit, I'm actually surprised of how crypto is holding through this massacre in the markets in general. Now let's look at seasonality, and as I said, September is definitely the worst month. And as you can see here from Net Davis Research, again, the Nasdaq cycle composite for 2022, you can see they're projecting lows right here in the beginning of October. And guess what? We are in the beginning of October. So now let's see whether this comes true or not. But if you are following this blue line, we are right here. So whether this would be, the end and we shoot up higher or not from here, it's something to see. But be ready, as I said, this could snap back any moment now. As far as the Dow Industrial 4-year presidential cycle, again, we are right here. And you can see there's like bright future ahead of us if you are following, of course, those seasonality charts only. And this is just for references. I'm not saying, go ahead and buy everything possible out there. I'm just giving you a reference of some statistics right here. Now, in summary, to end this, it's all red again. The models, they're in sell signal. The setups, they're almost none. I've been going through, I think, like 500 charts over the weekend. I just couldn't find anything tradable. I mean, there's some things to the short side if that's what you're interested in, but as we said, there are too many things pointing out that we might be actually moving higher now. So I don't think that short selling right now, unless you're day trading the short sells, is that much of a good idea. The market is selling definitely, and we'll see tomorrow if we move our short-term model to negative as well. The put volume is high, volatility is high, recession and Fed hikes, and I should have put here also the new threat in Russia-Ukraine war. So by far, cash is king right now. I would urge you to just be patient, sit out, find something else to do. You see, you can see on Discord, I've started playing Diablo 3 again. Just find something else to do until the market settles a little bit. Don't try to be the hero in this market. There's a lot of really good traders saying there's one good thing about bear markets and recessions is that after they're done, great bull markets are born. So just wait it out. I mean, there's no pride in trading and taking losses. It's just gonna wear you out mentally. So just be patient, wear it, and I think good times are ahead of us, but we just have to be patient now. So thanks for watching. I hope this was beneficial for your trading and informational. If you liked it, please leave a like, subscribe to our Discord, and come hang out with us. And just for a chat, if there's no trading to do, but we can always talk about interesting stuff out there. So I'll see you in chat. If not, next week, same time, another video coming up. For now, stay safe, trade less, and be careful out there. See ya.